Google shares at the top of the S&P after a U.S. judge ruled the tech giant will not have to divest its Chrome browser. Mark Mahaney, Evercore ISI's head of internet research, joins us to discuss what the ruling means for Google. Maybe he can weigh in on the Apple impact. He has an outperform rating on Alphabet and a price target at 240. Mark, great to see you. Thanks for the time this morning. Did you see this coming?
Well, we guessed that there was going to be that Google was going to be able to avoid a worst case scenario, and they did. I think the results actually probably for Google bulls like myself, this was probably better than we had thought likely. But I read through the judge's decision as much as I could at 230 pages, and I think it's a very thoughtful approach to search and technology. And that sentence on that first page that says that things have changed because of Gen AI. I think that's exactly what most people who follow tech would have wanted to have seen. Of course, the facts have changed on the ground. And we think, personal legal opinion, that's not worth much, is that the judge made the right call here, which is that let technology determine market shares going forward. He identified a monopolist. He laid out some strictures, and he's also fully respectful of what's happening in the market as a whole. So anyway, from a stock perspective, this was clearly a clearing event for Google shares. And we continue to like the stock. It's our number one pick because now you get to the fundamentals. This distraction is behind us. Now you can focus on the fundamentals, and valuation, I think, is still highly attractive.
Right. What drives fundamental? What drives that story from here?
Okay, so first, the core catalyst has got to be they got to maintain that double-digit search revenue growth. They've been at 11, 12, 13% for about 2 years now. We think that'll continue because what's underappreciated by the market is the quality of Google leads is actually rising, and it's kind of the law of unintended consequences. You show people fewer paid clicks so that when they click on them, they're less casual, they're more conscious, determined, whatever it is. But the marketers we talk with, the advertisers, are seeing higher quality leads coming from Google. That's causing pricing to go up. That's a good thing for Google. And then secondly, just like Meta, Google has been able to use Gen AI to improve its ad targeting, its ad selection. So you've got a search marketplace that's getting better. That's your core catalyst. If that continues. Then you got what I call these amplification catalysts. That's YouTube revenue. That's accelerating. That's Google Cloud revenue. That's accelerating. And then Waymo is coming to a town near you. And you put all that together, I think the stock's worth more. You put a 25 multiple on this or next year's numbers, you get to like 275 on 2027 earnings numbers. You get to 325. So somewhere in between there is probably where the stock can go. Call it $300. I think there's still a lot of upside. I like Google here.
One thing you didn't mention was Wiz, the cybersecurity firm in Israel that it's paid more than $20 billion for, and that is also working its way through the regulators now, namely Department of Justice. I wonder if this makes that more likely and what that could do to the thesis.
I would think it would make it more likely, Sarah. Google has a dominant position that's well documented in search. There's no dominant position that Google has. I mean, Google is a distant player in cloud computing and security software, and so I don't think that something like that would be blocked. But that's a limited opinion. But I don't think something like that would be blocked. And yeah, are you going to be buying Google for Google Cloud? No, that's still a tiny, and Google Software's business, that's still a tiny part of the overall value. But it all helps. It's all part of that. Those extra catalysts that you get with a name like this. You get the core search business continuing to do well, YouTube accelerating, Google Cloud accelerating, and then you get these kind of wonderful option values in some of their life science investments and definitely in Waymo. And there's more upside to the stock. It should trade at a premium to the market. It's been at a discount for quite some time. You just removed one of the biggest reasons that it's had a discount to the market. Now we can go higher.
We had a good discussion this morning about just how important it is to be the default search on Apple. Can you talk about why that matters so much?
Because so many searches occur on Apple devices, certainly in North America and in parts of Western Europe, not necessarily in the world. That's Android. The rest of the world is Android. But in higher GDP per cap countries, you'll see that Apple is a very strong presence. So having that default position, or at least being able to bid for it. I mean, the worst case scenario here wasn't that Google would get blocked from bidding on Apple. It's that Google would get blocked and then somebody else, OpenAI or Microsoft, would come in and take the exclusive search away from Google. And then you'd see a dramatic 30% market share loss. That was the worst case scenario, and that's not coming true. That's not coming to pass. The judge is allowing Google to bid, not exclusively, but to bid for that placement. And I would think, I don't cover Apple, but this has clearly been an overhang on Apple stock, and now they've got this almost guaranteed 25 billion a year and super high margin revenue coming their way thanks to Google. So it's hard to see this is not a big win for Apple too.
Yeah, no mistake that we have those two names on the screen as you speak. Mark, a really interesting day in tech. Good to talk to you. Thanks for the help.
Thanks, Carl.
Mark.